If you're a freelancer in the media production industry, when should you incorporate and become a proper business? Hi, my name's David, and I'm a freelance director of photography. I've been doing that for a number of years. I have worked in the video production and television industry since I was in high school. I worked on sports events as a utility initially, pulling cable through stadiums. I worked for my local city hall on their government cable channel, and just progressed from there. Went off to film school, worked part-time the whole time I was in school, and then moved out to Los Angeles and immediately took a full-time job as an editor at a post-production facility. I survived a full 7 months as a full-time employee. The idea of being there at 8 a.m. every day and making FedEx and doing the 8 to 6, I couldn't deal with the repetitive routine of it, and realized I need to get out and go do my own thing and jump around and start businesses and be a freelancer. Quick note, I set up a YouTube channel. It's called The Cranky Cameraman, and you can see all of those videos over there. All right, so I can't really give direct advice for anyone's situation. I mean, I went to art school. I don't have any kind of certifications in finance or accounting. So this is really just the kind of conversations we have when we're commuting and on lunch and working on set, as well as my personal experience and how I've structured my business. I want to start with this article I read on the LA Times. It was actually April of 2018, so it's been a little while, but California's top court makes it more difficult for employers to classify workers as independent contractors. I'll link to this article, but in reading about it, it's really the Uber gig economy thing that has fueled this whole debate in the state of California and also on a national level here in the United States. My understanding is, as far as the state of California is concerned, and the IRS, if you're in another state, is that you can be one of two things. You can either be an employee of another company where you're collecting a paycheck as a W-2 employee, so your employer is doing a pay period and they're withholding your payroll taxes and paying those directly to the state and federal agencies. Or you can be an incorporated business and you are an employee or a sole proprietor of your own business, like a LLC, an S corporation, or a C corporation. However, as most of you know, the reality of working on little 1, 2, 3 day video production projects is the vast majority of the crew that are on site are working as individuals as a 1099 independent contractor. The IRS in the state of California have a series of questions or terms that define whether or not you're truly an independent contractor. And the one that gets most of us as film crew is if the employer is specifying a time and a location and a duration in which you need to work, then you're not an independent contractor. You have to be an employee, which pretty much that's what a call sheet is, and you've got to be there. There's certainly some exclusions, like maybe you're in the art department and you're building things in advance of the production and you're working on your own schedule, or your wardrobe and you're out shopping. But for me, where I've been camera, lighting, grip, and editorial for the bulk of my career, I am always tied to the duration of the day that's typically run by someone above me. And now, being an employee absolutely makes sense if you're on a movie, a TV series, or really anything that's going more than 1 or 2 days of work. But I could go through my calendar. I should. I bet I've got maybe 5 jobs in a 12-month period that go beyond 3 days of work. And the vast majority are 1 day of work. So the notion for me that I've got to become a W-2 payrolled employee of the 150 different projects I work for in a given calendar year is craziness. And I know there's 2 major payroll companies that cover most of that, but where it doesn't work for me, trying to raise a family and be financially responsible, is if I'm payrolled, none of those 1 and 2, 3 day employers offer any kind of benefits, healthcare and retirement savings being the 2 big ones. I incorporated before the Affordable Care Act, and that was really the driving force for me to set up a business entity because at the time I had this terrible health insurance. It was a PPO. I think I had like a $7,000 deductible. Everything was considered a pre-existing condition. My wife went in because of a headache, and I don't know, they prescribed like prescription strength ibuprofen. And then years down the line, She went in for another checkup with an issue. They used the headache pre-existing condition to deny coverage for this current issue. So I switched over to a group insurance policy of my own creation. I created an S corporation and got my own group healthcare policy, and my wife and I had to qualify, I had to have a minimum of 2 employees. So my wife collects payroll, paycheck, and I do as well. Now, fortunately, the Affordable Care Act has changed all of that. This is actually our first year on Covered California, and I'm saving some money, but I don't know exactly how much money I'm going to make at year end. So I think when it's all said and done, I'm going to end up having to write a check back to Covered California because it's trending like my income is going to be higher than what I had estimated during the enrollment period. And the second one is retirement savings. I'm going to do a whole separate series of videos on what I did on the retirement side and what I'm continuing to do. But just at the surface level, 401k IRAs that are tax deferred, so that not the Roth, but everything else, as just a one-off non-union freelance film crew, you don't really have the ability to do a whole lot or save that much money per year unless you set up as a company and run your own benefit plan. And those rules change every year, and I'm not totally versed on the situation in 2019, but in a future video, I'll talk about what I've done over the past 20 years. So about 16, 18 years ago, tax time, I'm in my accountant's office, my CPA, and I was not incorporated. And this was the kind of the basic rundown of how he explained it to me. He said, David, you're an individual. Your billing is it's growing, it's getting significant, like it's a freestanding full-time job. Your expenses are getting close to 50% of your gross billings. So as an individual, that marks you as a risk or a priority for being audited, even though everything I was doing was legitimate. Obviously, you would want to avoid that audit pain in any way possible. And I was nearing the $100,000 mark of gross billing. So expenses near 50%, getting close to a gross billing of 100 grand. And he said those are really the 2 criteria. And the third is liability. So as an individual, I wasn't insured at the time, no business insurance, and if I have a light of mine that falls and damages or injures another individual on site, I'm potentially liable in a lawsuit. So for those 3 reasons, expenses near 50%, gross billings near 6 figures, and liability, he said it's time for you to incorporate. And then the question is, what kind of entity do you do? At the time, the 3 were C Corporation, S Corporation, LLC. C Corp didn't really make sense for me because I didn't have the intention of scaling with employees and locations and all of that. The S Corp made the most sense, which is just an employee plus your spouse. All right, so here's a rundown on numbers and costs. So in the state of California, and my understanding is even if you have incorporated your business in another state, you still have to pay this fee to the Franchise Tax Board every year. It's a fee for the privilege of operating as a business in California. It's $800 a year. The next thing is, as soon as you incorporate, that's a new tax return for a new entity. So you're going to have your personal tax return, but before you can do that, it's due a month prior, is the business tax return. So now you got to pay for a second one. I'm going to say $800. I really don't know. I'm actually paying, I think, about double of that just because of all the moving parts and things that have grown over the years with my accountant. You're going to have to set up a new bank account. I recommend a minimum of 2, a business checking and a business savings. You can see my previous video of how I manage receivables and always move a percentage to savings to cover any, well, 1, a savings buffer, emergency savings, but 2, more importantly, it's the reserve that I use to make my tax payments, which I do 4 times a year, once a quarter. Okay, the third annual expense is the big one, and it's business insurance and workman's compensation. So some of my peers that are just covering for basic liability of about $1 million coverage, and maybe they have a little bit of equipment they want coverage on, say like $50,000, they're paying like $1,200 to $1,500 for a policy. You really need to shop it around. I don't know. I'm not up to speed on all the numbers. I'm paying for all of those pieces about $6,500 a year, but I've got $300,000 in replacement coverage on equipment, $2 million liability, because I have a few clients that require $2 million versus $1 million. And then I have 2 commercial vehicles with commercial auto coverage, which is about double the cost of normal personal coverage. So those are the 3 items associated with setting up a business entity. The insurance is a necessity once you get to a certain level and you have equipment and resources involved. The $800 fee to the state of California and the additional tax return, $1,600 a year, $2,500 a year. You'll find that as you grow your business, the additional tax advantages and deferred retirement savings contributions that you can make far outpace the extra cost and overhead associated with maintaining a small corporation. And I will cover in the next video some of my retirement and investing strategies that I've implemented over the past 20 years. Let me know what you think. Love to see some comments. And if this is super boring and you aren't interested and you want me to go in a different direction, I'd like to hear that too. I'm just doing these video series as a way to give back and share a bunch of information. Like I've said before, just before I forget it all. And this helps me remember too at tax time or when a project comes back. I frequently refer back to some of the material I've made in the past, previous projects, to figure out how to do the next one and make it better. That's it for now. Thank you.